Good day to one and all. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today, during this Asian Session Live Market Analysis on the Forecast webinar, that is 30th of Jan, between 5 and 5:30, I'm going to explain to you the expected market moves during the 3 sessions of each days of this week, 30th Jan to 3rd February. Besides, I'll also explain to you the market reading technique for the day so that we'll be able to understand what the players intend to do during this particular day. Besides, I'll also explain to you about the trading strategy we could do during that of the trend reversal time. Now, so far till last week, we have seen the yearly trend reversal move. The yearly trend reversal moves are known to be very aggressive. So the players have made yearly trend reversal moves in the case of GBP and USD predominantly during that of the last 6 weeks. So you know that USD GBP, they gained the level, they dropped the level to 1.1995 and then gained to that of almost close to 1.27. Then in the case of USD from that of 118.80, they dropped it to 103. So this is how they just make a very big move in the market. And that was the yearly trend reversal. Now from now onwards, you will come across the monthly trend reversal move in this particular week, because the month of January gets over and the month of February starts during this particular week. Within these 5 days, they will try to make volatile moves in the market and accumulate positions. So to start with, what they will do, they will gain the levels in the case of Euro and GBP and offload their holding positions, and then subsequently drop and buy back against their sell, so that they are able to realize the profit for that of the month of January and take fresh positions for the month of February in order to gain the levels during the month of February. During the month of February, they are expected to make steady gaining moves in the case of Euro and GBP. So we will just see the 3 basic components, namely the derived forecast, the market reading, and the live market analysis, then the trading strategy during this webinar. First of all, the forecast. It is a monthly trend reversal time, so very volatile moves are going to be visible in the market. So the expected market moves for all the 5 days of this particular week are given here. So they are expected to make the swing and rise during that of the Japanese session with a positive net change in the case of Euro and GBP. Then later on during the European session, they are expected to slide, and then they are expected to firm up during that of the US session. Then tomorrow they are expected to make a dip during start of the day during the Japanese session and also during that of the European session, and then gain the levels during US session. So that will be the move they will make for that of the month end. The end of January, they are expected to drop Euro and GBP and accumulate positions. Later on, they are expected to make a small dip on first and accumulate fresh positions for the month of February in the derivative market, especially futures and options. And then subsequently, they're expected to firm up and rise on 1st of February. Then second, also they are expected to firm up, but a drop is envisaged during the European session in order to accumulate more positions. Then later on Friday, they are expected to make a very quick rise in the market. Probably they could use non-farm payroll or any other excuse in order to gain the levels. Then later on, from next week, that is 6th to 10th of February, they are expected to make swing and rise move, that is less drop and more rise moves are expected to happen during the following weeks in this particular month of February. So month end, the market is expected to make the volatile moves. So follow the session-wise forecast and then try to take the positions. After the drop, don't sell, and after the rise, don't buy. After the rise, you can take sell position near the high set for the day and book profit during that of the drop. And similarly, you can make a buy whenever they are making a downward stop, and then try to book profit when they are making a quick rise to that of the high set for the day. Watch carefully and then book profit. So that way you will be able to do either way swing trades during this monthly trend reversal time. Now the expected levels in this week, they could show euro could come down to 1.0650. The low they are set today is 1.0708, and they could go to 1.10 area. Then in the case of GBP, they are shown the low as 1.2559. They could come down to 1.2450 and then going quickly to 1.29 area. Then in the case of yen, they could drop to 113.50. Currently, they are shown the low as 114.33 and then gain the level to 117.75. Then in the case of CHF, they are expected to make a narrow range consolidation from the top 0.9900 to 1.0150 area. They just made a very nominal swing of 21 pips between 0.9961 to 82. Then in the case of Canadian dollar, again, they are expected to make a lower level swing and downward stop and then start gaining the level during this particular week. So the low they could set 1.3075 and the high they could set is 1.3275. Then Australian dollar is also expected to consolidate around 0.7550. They come down to 0.7549 as the low, and consolidating here to gain continuously to 0.7775 area. So these are all the range in which the currencies are expected to swing. And every week I am showing the range, and you could have seen most of the weeks they would have just made the low and the high as estimated. They are all mathematically derived levels and based on the limitations given to that of the banks and the players. So that is really working. The players are really following such limitations. And there are one or two occasions wherein they have made extended downward stopping or upward stopping beyond that of the estimated low or the estimated high, but they continue to swing in the range provided. During such quick move away from the top, the low set, for example, 113.50 in the case of yen, if they come down little more, you can accumulate the position so that you will be able to really capitalize maximum profit. Now coming to that of the market reading, today in the case of euro, 1.0708 is the low, 1.0740 is the high. They are not breached the low or the high. Then in the case of GBP, 1.2559 is the low and 1.2601 is the high. They are not breached the low or the high. Here you come across the live market put page and they are not breached it. And in the case of yen, 114.32 is the low. They just breached the low and came down to 114.27 and started gaining the level, and 114.95 is the high. So they are expected to oscillate in this particular area, and they will make one more downward stop and before making a rise during the European session. 99.61 is the low in the case of USD CHF. 99.82 is the high. They are not breached the low or the high. Then in the case of Canadian dollar, 1.3125 was the initial low. They just breached it up to 1.3121, started gaining the level as a brief downward stop to breach the high and go above. Then in the case of Australian dollar, 75.49 is the low and 75.62 is the high. They are not breached it. So only in the case of yen, USD yen, they just breached the initial low. And in the case of USD CAD, they breached the initial low, indicating that they wanted to make the contrarian move and handle the crosses to start with briefly, and then they will come to that of the majors. If you look into that of the live market put page, you find that Euro, GBP, and Australian dollar are showing positive net change. USD yen, USD CHF, and Canadian USD CAD are showing negative net change, indicating that they are making the USD weakening move in all the pairs. Slowly, they will come to that other contrarian move as they have just done the downward stop in the case of USD yen and gain the level, and also in the case of USD CAD, a downward stop and gain the level. So it indicates that they wanted to make the contrarian move. Now the recommended trade, you can take a buy near that of the low when they make a brief downward stop, because the spread is not 40 pips between the initial high and the low, so they could come down a little bit in the case of Euro before making a rise. So we can take around 1.0700 a buy, and then they will gain the level during the US session. At that time, you can book profit. Keep the hedge order to limit the risk, and once the position makes profit, you can keep stop at entry and then trail the stop, maintaining 15 pips from the other market, and keep the exit order so that the market could either hit the trailing stop or the exit order. And if the going is good, you can just move the exit order also to the higher level to maximize the profit. Similar to that of risk limitation, we should also go in for the profit enhancement. So then only you will be able to see that you do less trade and earn more money. Because if you do less trade, you are taking less risk. And if you earn more money, the ratio of earning profit out of those trades will gradually improve, and that will be less stress trade, so that you will not have much of a stress and you will not have uncertainty for a prolonged period. Then in the case of GBP, you can keep a buy limit order near that of the low, and then when they make a downward stop, and you can take a buy, and then later on you can book profit. Then in the case of yen, they could make a downward stop and again. So they are just hitting the stops of the long holders of last week, and because they have become bullish and they are trying to take buy position during the gain, that is why they have made the drop in the case of USD yen to start with, and then they will try to hit the stops below that of the initial low, because below that of the supports, the traders try to keep the stops and the players hit the stops and then start gaining the level. So at that time you should take the buy, so that we will be able to really see nice profit of buy near the low and book profit near that of the high. So these are all the market timings. So each day the session is divided. There are 3 sessions are there: Japanese, European, and the US session. And in between the sessions, you come across the gap time. They are naturally occurring time of 30 minutes between Japanese and the European, 30 minutes between European and US, and nearly about 4 hours between US and the next day Japanese session. And this is mainly the gap time because the banks in certain countries close and the banks in certain other countries take 30 minutes delayed start. because that becomes the local 9:30. So at that time, you find a naturally occurring gap time, and the players use specific orders in order to hit the stops without taking positions. Always try to trade wherever the spread between the high and the low is more than 40 pips, so that once you take the position, you'll be able to see quick profit. And always keep in mind, when the new low is not being breached for more than 30 minutes, you can take a buy closer to that other low and book profit when they go closer to high and not breach the high. When they breach the high, watch whether it is a stop and or an extended move. Then accordingly, you can book profit. So if you got any question, you can ask me. I'll answer to those questions. And Brent has got a question. Do any of these extended stop and ever occur in the late part of a session, or does it just occur on data release? See, the extended stop and move alternates with that of the intentional move. So suppose they start the intentional move during that of the Japanese session, say late Japanese session. Then they continue through that of the European session, and then they will try to make an extended upwards or continue to make, suppose they are rising, they will do a quick rise during the early part of the US session. So they don't do the hat trick. So not more than 2 sessions, they just do the similar move and then start making the extended move during the rest of the 2 sessions. Here mid sessions they handle across, and then during that of the late session, they could make a breach of the low and stay below that. That is how the extended stop and will be. So in the event, if the data release is during that of the European session, most of the time you come across data release around late European session. In that situation, European session will be the first session, then the US session will be the second session. The next day, Japanese session, they will make the continuation of the move and reverse. And the extended move could happen during that of the late Japanese session. So if you follow the time, keeping this particular chart in your mind or visibly in your computer, then you can find out what sort of moves they are doing it, because following the time frame is very essential in order to have a successful trade. Because none of the other analysis you find the time frame is being given importance. You are only given the time frame in terms of the chart pattern, whether it is 15 minutes chart or 5 minutes chart, 30 minutes chart and things like that, but not demarcating the different sessions of the day. But what they have demarcated is a different demarcation, which will really give you the confusion, or it will give uncertainty to you and not the real trading ideas. So what the players follow, we need to follow. We can call it by session 1, session 2, session 3, but these are all the timings the players follow. Once you follow the players time frame, then you will be able to read the type of moves. That is why I always say that keep the live market code page and also remember the time frame very well, or keep this particular slide also in your computer so that you can find out from that of the GMT time, okay, what session it is, how they are making the move in different pairs, whether they are making the USD gaining move or USD weakening move with the help of the net change. And also by breaching the high and the low, you can identify whether they are making the swing in between the low and the high, or making a stop and above that of the high or below that of the low, or they are making an extended move above that of the high, that is they breach and go above, stay there for 30 minutes and then not breach the new low for more than 2 hours and reverse. That is extended move. Intentional move, they breach the high and go above, and every 30 minutes they slowly breach the new high and continue to gain. You can easily identify Note down the time and see, okay, this is what they started, late European session. So Japanese, the US session also, they will continue to gain the level. Mid session they may make a small dip, that is to confuse, and some people think that it is going to be a reversal, and then later on find that they are trapped. After the drop they sell and then go in for a short covering when the rise happens during that of the late session. So follow these session-wise timings and the session-wise moves, and I can assure you 100% in all trades you will be able to earn money. Since it is going to be very volatile this week, would they do a lot of variable spread? Yes, especially the variable spread will be very high before that of the data release. So they will simply make a spread. Suppose euro, the high is, the bid is 1.0770 and the ask is 1.0720. So ask is supposed to be higher when compared to bid. In the variable spread, what they do, they just gain the level in the ask and drop the level in bid. So if you are holding sell position also, it will make huge drawdown. And if you are holding a buy position also, it will be making a huge drawdown. Even though you are not done any trade, you are only simply holding position. There is a danger of variable spread. And they simply make a simple remark like variable spread is offered. And when you ask what is that variable spread, then they will say like this: euro 1.0731, 1.0731, bid and the ask will be the same. So that is what the dealer will tell you, or the salesman in a broking firm will tell you. Then you will think that, okay, when I take a position, I will not incur any loss, initial loss. And straight away, even if it gains 2-3 pips, I'll be able to book profit. That is what you think, and think of doing the scalping trade. But without your knowledge, suddenly if they make a variable spread, then even in a scalping, you will come across the drawdown will be big. Because many of the traders who are doing scalping, what they do is they are aiming for 5-10 pips profit. So they take bigger lot size. This is the normal human tendency. So increase the lot size and decrease that spread, or decrease the profit taking spread. So even 5 pip spread with the 10 lot position will make a sizable profit rather than taking one position with one micro lot. So that is what people think. And then later on, when the variable spread becomes unbearable, they see that margin calls straight away being applied to their account. Then gold person. Most of the analysts are negative of gold. What is your forecast on gold? See, normally during that of the trend reversal time, they will make extreme moves in the gold. So first 2 days you will come across the gold is coming down, and thereby you will find the players are accumulating gold positions at the lower level. They may not make a very big drop, and if needed, they may, if there are a lot of long holders at the higher level, they may go in for an extended downward stock before making a rise. So use the hedge order to limit the risk, but gold is expected to gain very big in the month of February. Any other question, please? So no more question is there. Let me just show the forecast again. These are all the expected market moves for this week, and session-wise forecast is given. The session timings are also given, and it is available in the recorded form in FX Street, so you can refer to it from time to time and do it. Otherwise, you can just save these, take the screen print of the slides and make use of it for your reference for the week. This is the range in which they are expected to make the swings in this week. They are still holding USDN and USD CAD near that at the low, and during the late sessions, they are expected to make a downward stop, and along with that of Euro and GBP, when they make a small dip and then gain, they will make a downward stop, and in the case of USD and USDC CAD, and then started gaining the levels during the European session. Watch carefully and try to take positions and book profit. Aim for only swing trades, capture about 20-30 pips each time, so that you will be able to build up your equity. Don't be influenced by market fear or the greed. Both are detrimental to the accounts. The recommended trades are given here, and don't try to take the positions in the intermediary level between the high and the low. Always try to take a position very close to that of the low or very close to that of the high, maximum of 5 to 10 pips away from that. And especially when the spread becomes more, the movement will also be very good. At the time, if you take position, you will be able to quickly book profit. Be an opportunity trader rather than being addicted to trading. Think that I am a 24 hours trader and I am a full-time trader. So if I don't take position, I don't feel comfortable and things like that. Taking position does not give you profit. Taking position and closing with the profit will realize the real profit for you. Simply become addicted to trading and continue to take the positions without realizing the profit and say that I am unlucky, I am not able to earn money from the market, all those things. That means you are an emotional trader, and the players are targeting such emotional traders to earn their money. Don't become victim for such act of the players as well as the platform providers. So always keep in mind that take only one position at a given time. After closing it, then you think of another position. That way you will avoid over trading and avoid the margin call impact on your account, and then nobody will be able to prevent you from making money from the market. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and hope you will be able to really get the benefit out of the forecast and also the range in which the currencies are expected to swing are given here, the webinar, and try to objectively see how exactly you can make use of this in order to reduce the uncertainty. Thereby, you will be able to build up your equity. Just because you have got small equity doesn't mean that you cannot earn money. You can earn money provided you take less position, not over trading, and also try to focus on the trading strategy of limiting the risk and maximizing the profit. Wish you all the best in your trades. I'll come back on Friday and review the forecast, what I have given it as usual, so that you will be able to understand how far the forecast is reliable and you can use it in your trades. Wish you all the best.